99% of you miss this. You just don't understand the power of the fractal structure. I'm going to pump this into you one more time in this playlist. Now we're on the US dollar Swiss franc. I'm on a 4-hour time frame. We're going to look down at the 15 for an entry this time. Now again, look, we're going to look at current price, the move heads downside. The last area we see the push down, okay, run the low. We're already in a bearish trend, okay, on this market. We're going to look at the last potential entry you could have taken using this type of fractal structure and this strategy. You really need to understand what you're missing when you're not applying this to the markets. First, let's go through this movement down. We'll mark up our structures and then we'll go down to lower time frames and we'll start reading that structure again with the fractal structure, the swing structure, okay, our internal structure. And if you want to learn more on structures, don't forget there's a full playlist in this channel which goes through the market structure playlist. I'll leave that above for you to go through and check it out after this video. So let's now look at where we see a break of structure. So we can mark this off as our break of structure to downside. So we have a nice break to downside. Okay, this means this is my current high. That's my strong high. We're not expecting price to run back through this high. Then when we start seeing the pullback, okay, this is my current week low. Now we can obviously see since then the market's pushed through, okay, and it's created a new strong high here in the market. And this is our current week low. Now what this means is within these movements, we have what we class our trading range. So we have our trading range, okay, from this high to this low. Okay, that's our current trading range on this move. And this is our current trading range on this move here to downside. And we're looking to see price as we pull back into that trading range and looking for entry. Now, as well as those trading ranges there, you can see with the swing structure, we can also apply, we went through in a previous video in this playlist, understanding the structure of that fractal structure of a trading range. So our fractal structure is where we see the market pushing down. This is our current low. Our last breakup, okay, with a fractal structure, we broke this low here of fractal structure, and then we broke this low. That means the last fractal high is this one. So we can mark this out as a potential fractal high. This is our fractal low. This means our structure then goes from being this as our, okay, swing move to, we actually use an arrow instead, to this. So we've gone from this full swing here to this smaller swing. So what we're looking for is price to pull back inside this area. Now we look at where price is going to come back into. Well, we could mark out this area of imbalance. This is an ideal area we expect price to pull back into for another move to downside. Now, if you're not sure on how we use imbalances, there is a full playlist in this channel. I'll leave it linked above now. Make sure you go and watch it. Every single video is going to help you to understand how we use imbalances. And it's also going to show you what these candlesticks, these red and blue candles, and why they're colored. So at this point, we identify that the market's pulling back against the trading range of this fractal structure and this swing structure. As the market pulls back up, we can see we've got smaller moves, say sideways, push up, and we want to see the market come back into this area of imbalance. And we also have here, okay, our last small area of supply. Okay, that's our drop-based drop area supply. And what we're looking for here is a reason to take a sell, where the market comes back into those areas to look to reverse that market. So if we mark up and leave that area of imbalance once again, okay, and as the market comes back up in one test, pull back, and we go higher. So we can read the candlesticks. We're inside this trading range, okay, to the upside. What we're going to look for here, and we'll remove this level, and we'll remove this for now. We're looking for a reversal out, okay, to target this low. So what we use is the lower time frames that we've been through in a previous video. We'll start looking for that structure and for reason to take a trade. Now, as long as we don't push through this high, okay, there's no reason to worry about any reversals. Now, this would be also my last area of supply. And if you want to learn more on supply and demand, don't worry, you can go through a playlist in this channel, okay, shows you everything about supply and demand. I'll leave that linked above right now as well. So when we see this market pushing away from this area, okay, this area of supply has gone deeper on 3 occasions, and then we push out once again for this area of supply. Okay, we could even mark this of this full move, we retest it here, And like we had, this area was marked as well. We can mark this out, but price never comes back to that. We don't have to come back to supply, not if we see these areas of imbalance holding price. So that is how we mark up that 4-hour time frame. Okay, we're not actually going to do is when price comes back in here for the first time, we're going to see how you can actually have a losing trade with this process as well. Not every strategy is going to give you a 100% win rate, and this is no different. Okay, we can have losing trades. Let's pop down to the 15-minute. So now we understand where we can see price coming back to. Now, if we look to the left, when we see price pulling back here, let's look to the left. Where are we coming into? Do we have a swing high right there? Okay, so we're pushing through a swing high. Then we push higher, and then we're looking for that reversal out. So when we see the market pushing up here, what we're looking for is the last breakout, which is this high. And then this becomes my fractal reversal level. Now, understand what that is based going through the previous videos. Now, if you don't understand what the fractal reversal is or how you mark up your fractal levels, make sure you go through to the first video of this playlist, watch that video, because it shows you exactly how we mark that up. So as we break down here, we can start marking out an area of supply. So we have an area of supply here, the market comes back, pulls back into, retests, and we were looking for the market, and we always want to look for, okay, your first profit target. You want to be looking to get out of the trade risk-free as quickly as possible. So there's a first target hit. Okay, so the market, and in fact, we may even had a first reversal here as well. We had a break here to the upside, and that would leave, let me just believe, would have been this low here as a fractal reversal. And once again, we'd have another area of supply. Okay, so you can see this one, we didn't quite come back into that supply, and then we ran through it. So there is a losing trade. Okay, so we have a losing trade here, and then this trade, we've hit our first target and we'll be risk-free. The market actually starts to, and we can mark this off, that we start to internally break structure and continue to go lower. And then we reverse back up, and then you can see the market continues up. So we had a losing trade here trying to take that entry. Now, what we need to double check is based on our structures, we're looking for where that 50% area is. There's our 50%. We're inside premium based on this structure. Now, if we base it on the full swing structure, okay, where's our 50%? So our 50%, and let me just mark that up across. There is our premium, okay, and there's our discount for this pullback. So if you was looking to take this trade here, you have to say to yourself, you're either going to be taking a trade based on this swing pullback of the fractal structure, or you're going to take it off the full swing pullback. When they fall together, it's much better. But on this occasion, you can see we've got space to get to this area of premium. So yes, we had a losing trade and a winning trade, but if you ignored the fact that we hadn't yet got to this premium, the 50% area, then wait for price to get here. And this is where you can actually start to improve your trading. Don't blindly jump in as soon as you see a reversal using this strategy. Wait to get to a location that you want to take a trade from. So if you've actually waited until this point, we apply the same thing again. We can see we have the continuation higher to this high. Okay, so we have a break here. Let me just show you what we get. We get a break to the upside here. Market continues up, breaks up, breaks up, breaks up. This one just broke up. Now this may have been a false signal. Okay, we wicked through, and you could have looked at this as a potential reversal area of supply, and we pushed back through. So again, we could have a losing trade. I wanted to demonstrate you will have losing trades with this. The next time we push up again here, we have this as our reversal point, and we have a new area of supply. So never walk away from your first entry. And you can see the market never comes back to remove that supply. So this is now your entry. Okay, so we can mark this out. That's our entry. Stop above that high. You've been triggered into the trade. Where's your target? Well, your first target on this one would have to be this low. Take some profit off the trade. Okay, you've got just over 1-to-1 there. And your second is going to be running for this low. Same would have been if you was taking a trade here. This would be your target based on that 4 hour. So you've got over a 10-to-1 risk to reward. Can you see the power of understanding the use of fractal structure? 99% of you are not using this, and you're missing out on this potential type of trading. Waiting for this pullback above into this area of premium, okay, based on the swing structure, would have given you one loss, okay, and a winning trade. Now, if you watched the 4-hour time frame candles as well, you may have waited until you saw this reversal, this peak based on a candlestick pattern on a 4-hour. But let's say you've taken this losing trade, you've risked 2% on a sell. So you have got basically a minus 2%. That isn't a great minus, is it? Minus 2%. Okay, so you've got a minus 2% loss on that trade. Then let's say you've taken this trade, you've got a plus 10% plus the 1-to-1 you've taken, that's plus 11. So you've got plus 11% profit on this trade. So that's a 9%, and we can use this as our 9% overall profit. Now, if you didn't take this first profit target and you decided to just let the trade run for the low, you would actually have then basically 20%. So you'd have a nearly 21% risk to reward. Minus that, it's a 19%. So you can see how you can grow your account much faster if you're not taking those first profit targets. But it will affect your emotions in trading, and it's important to look to take off some profits early on so you can be risk-free and more comfortable in your trading. So this is the power, okay, of using fractal structure. And if you want to take fractal structure even further, understanding how to apply it to all time frames, especially those entry time frames I've just gone through here, the new Novice to Pro Mastermind, which is in development, has already got 4 modules released to my members within the trading coaching experience, which will have access to those modules to help you to understand to reprice like this and start trading like a pro. Now, if you want to check out the trading coaching experience, there'll be a link below in the description of this video, and there'll be one popping up at the end of this video.